And here are the crypto top headlines. First up, crypto exchange Binance restores Euro services after finding new fiat partners. Next, Elon Musk, Mark Cuban team up to contest SEC trial strategies. Also, Tether to publish reserve reports in real time in 2024. Plus, Bitcoin ETF anticipation fuels price surge. BlackRock and Fidelity update filings. And he broke his word. Ex-Consensys staff sue founder over employee equity deal. Welcome to Crypto Top Headlines, where there's no clickbait thumbnails or titles, and no speeches on my opinions, just bringing crypto's news to you. We are a new channel here on YouTube, and would greatly appreciate it if you would click on the like and subscribe buttons as well as the notification bell. It does help support the channel, so thank you in advance for doing so. Now, on to these headlines. Our first top headline, crypto exchange Binance restores Euro services after finding new fiat partners. Euro payments, deposits and withdrawals are back on for European Binance users 1 month after the termination of services by PaySafe. Crypto exchange Binance has announced it has onboarded new partners to handle Euro deposits and withdrawals 1 month after losing its previous fiat partner PaySafe in September. In an October 19th statement, Binance announced it had signed agreements with new fiat partners for Euro payments, deposits, and withdrawals. The move follows regulatory and debanking woes in the European Union, where the firm was forced to look for new banking partners after losing support from PaySafe in September. Binance said users have already started migrating to the new services provided by a number of new regulated and authorized fiat partners. It did not specify which firms it had partnered with, however. The announcement noted that fiat services offered by the new partners include Euro deposits and withdrawals via open banking and SEPA/SEPA Instant. Users can also buy and sell crypto using the Single Euro Payments Area, or SEPA, bank cards and fiat balances, and trade Euro spot pairs. In late September, Binance urged European users to convert their euros into Tether before the end of October, though the latest announcement could suggest this is no longer necessary. However, some users were still reporting issues depositing euros after the announcement, while others asked about fiat partners for the British pound in the United Kingdom. PaySafe pulled support for transactions in British pounds in May, following concerns raised by UK financial regulators over the partnership. On October 16th, Binance suspended access to its exchange for new users based in the United Kingdom. The move followed the termination of a partnership with a third party to approve communications on its platform under new local rules by the country's watchdog, the Financial Conduct Authority, or FCA. Binance has yet to source fiat partnerships for its UK exchange, where British users are still unable to deposit pounds. Cointelegraph contacted Binance for more specifics, but did not receive an immediate response. Our next top headline, Elon Musk, Mark Cuban team up to contest SEC trial strategies. The context of the legal challenge centers around the SEC versus Jarkizi case, in which George Jarkizi contends that his Seventh Amendment rights were violated. Elon Musk, Mark Cuban, and others have collaboratively submitted a shared amicus brief to the Supreme Court of the United States to raise concerns about the U.S. Securities and Exchange Commission's approach to conducting internal proceedings without the inclusion of juries. Mark Cuban, a billionaire crypto investor and decentralized finance advocate who actively engages in the cryptocurrency space, and Elon Musk, the CEO of Tesla and SpaceX, who recently rebranded Twitter into X and wields influence and controversy in crypto, both assert that these administrative proceedings produce disparate outcomes for individuals facing SEC charges. Consequently, this approach has raised concerns about the potential infringement of the U.S. Constitution's Seventh Amendment right to a jury trial. The context of this legal challenge centers around the SEC versus Jarkizi case. George Jarkizi contends that his Seventh Amendment rights were violated in this specific case. He argues that the SEC's internal adjudication process, which lacks a jury and is overseen by an administrative law judge appointed by the Commission, contradicts these rights. This effectively results in a single entity fulfilling the roles of judge, jury, and enforcer. Musk, Cuban, and other amici curiae highlight a shift in the SEC's approach between 2013 and 2014. They observed that the SEC started handling more cases internally rather than through federal courts. This change occurred after a string of unsuccessful insider trading cases were tried before juries. Musk is facing his third notable legal dispute with the Financial Regulatory Agency. This comes in the wake of prior lawsuits in 2018 and 2019. Currently, the regulatory body is pursuing the involvement of a federal court to request Musk's testimony regarding his acquisition of Twitter, with a specific focus on his public statements about the transaction as disclosed in legal records. Nonetheless, the amici curiae maintain a steadfast position, contending that opting for administrative proceedings over the option of federal court juries runs counter to the SEC's stated mission. Furthermore, such decisions could potentially negatively impact investors and the markets the SEC is committed to protecting. Our next top headline: Tether to publish reserve reports in real time in 2024. Paolo Ardino, Tether's chief technical officer and incoming CEO, said the firm plans to start publishing reserve data in real time in 2024, according to a report. Tether Holdings, the issuer of the world's largest stablecoin by market capitalization, Tether, is reportedly preparing to update the frequency of releasing its reserve data reports. Paolo Ardino, Tether's chief technical officer and incoming CEO, disclosed that the firm plans to publish reserve data in real time in 2024, Bloomberg reported on October 20th. Tether did not immediately respond to Cointelegraph's request for comment. According to the Tether transparency page, the stablecoin issuer currently publishes and updates its reserves data at least once per day. Tether also issues monthly reserve reports in addition to quarterly reserve reviews. Despite many cryptocurrency markets seeing some slump in 2023, the USDT issuing company has gained momentum over the past year. According to Tether's Quarterly 2 update, the company's assets rose 5.7% to $86.5 billion. The firm made more than $1 billion in operational profit, which is a 30% increase from the previous quarter. Tether has also seen an increase in its stablecoin lending in 2023, which came despite the firm having cut such loans down to zero in December 2022. According to Tether's Q2 attestation from accounting firm BDO, the firm increased its excess reserves by $850 million, bringing total excess reserves to $3.3 billion. The company also disclosed that it had $72 billion worth of indirect exposure to United States Treasuries held by money market funds, as well as U.S. Treasuries collateralizing its overnight repo. Our next top headline, Bitcoin ETF anticipation fuels price surge, BlackRock and Fidelity update filings. Bitcoin's price saw an increase of 4% on Friday, exceeding the $30,000 mark to reach $30,074, a peak not witnessed since August 2023. This surge was attributed to four significant factors. The first factor is the potential approval of spot Bitcoin exchange-traded funds by the U.S. Securities and Exchange Commission. This possibility has led to market speculation, with both BlackRock and Fidelity updating their respective Bitcoin ETF applications. The news of these updates and the anticipation of spot Bitcoin ETF approval, which could be announced at Benzinga's Future of Digital Assets conference on November 14th, prompted a bullish market sentiment. James Seifert confirmed that issuers are responding to SEC feedback, while Alex Kruger and Christopher Inks predict substantial price surges on the day of approval. Matrix Ports research suggests that Bitcoin's price could range between $42,000 and $56,000 post-approval. A report from CryptoQuant indicates that the greenlighting of these ETFs could potentially inflate the market cap by up to $1 trillion. The second factor contributing to the increase in Bitcoin's price is Federal Reserve Chairman Jerome Powell's comments on suspending interest rate hikes if inflation progress remains steady. Powell emphasized the need for balancing inflation control while avoiding recession risks, providing a bullish push for Bitcoin. The third factor is the rising gold price, which has seen an increase of 10% since October 6th. Bitcoin often follows gold as a market chaos hedge, influencing its price in turn. Charles Edwards noted the increasing need for such insurance assets due to geopolitical tensions and economic weakening. Lastly, data from CoinGlass shows about $21 million in Bitcoin shorts were liquidated recently, with Crypt Nouveau highlighting a high long-short open positions ratio. Despite these optimistic shifts, Bitcoin's price has slightly fallen under $30,000. Other cryptocurrencies, such as Ethereum and BNB, recorded rises of 3.3% and 1% respectively, while XRP soared by 7% after the SEC's request to dismiss lawsuits against Ripple's executives. Furthermore, Solana's saw a substantial rise of 10.58% on Friday. Joe Edwards from Enigma Securities, as mentioned by CoinDesk, predicts a potential sell the news event post-approval. This suggests that while anticipation for the ETF approval has driven Bitcoin's price up, the actual approval could trigger a sell-off, leading to a temporary price drop. Our next top headline, he broke his word. Ex-Consensys staff sue founder over employee equity deal. Consensys founder Joseph Lubin has been named in a new lawsuit filed in New York by over 24 former Consensys employees. Over 24 former employees of Ethereum infrastructure firm Consensys has filed a fresh lawsuit against the firm's founder and CEO, Joseph Lubin, over claims he diluted employee equity shares against earlier promises. The former staff alleged that Lubin, who was also a co-founder of Ethereum, breached this no-dilution promise made in 2015, according to the plaintiff's October 19th filing in the Supreme Court of the State of New York. The plaintiffs allege Lubin lured in smart and motivated colleagues to work for Consensys in late 2014, claiming the firm would become the future of cryptocurrency and the crypto Google. Around that time, Lubin allegedly stated in a document that he wouldn't dilute employee equity shares, The plaintiffs allege he later broke that promise. It is my intention that the percentage Consensys members receive will not be diluted by additional issuance, the document reportedly stated. The plaintiffs argued Lubin didn't just break the promise, but also got rich off it while they got nothing. He broke his word, and he violated his legal commitments and duties. While Lubin got rich, plaintiffs got nothing. The plaintiffs, who held shares in Swiss-based holding company Consensys AG, formerly Consensys Mesh, claimed the shares were rendered worthless when Lubin transferred cryptocurrency wallet MetaMask and other assets to its new United States-based entity in 2020. The plaintiffs also named investment bank JP Morgan as one of the 7 defendants, alleging it played a pivotal role in negotiating the asset transfer and became a new equity holder in the new U.S. entity. Lubin, his inner circle, and JP Morgan kept the details of the negotiations secret. Plaintiffs were left in the dark. Lubin did not bring over many of his early employees, the plaintiffs here, as equity holders in the new company. Instead, they continued to hold shares in the far less valuable entity that had been stripped of its assets, the plaintiffs added. Consensys says plaintiffs' claims are meritless. Speaking to Cointelegraph, a Consensys spokesperson called the claims frivolous, saying the plaintiffs are now trying their luck in the U.S. legal arena after 2 years of getting nowhere with their frivolous claims in a Swiss court. The plaintiffs now believe their meritless claims stand a better chance of yielding a payday if they game U.S. courts and entangle Consensys software and other related parties in litigation, the Consensys representative added. We fully expect that the plaintiffs, who were never employees of Consensys software, will soon find this gambit is another fruitless attempt to enrich themselves from success of others. Despite claims that the plaintiffs' legal challenge went nowhere in Switzerland, the country's High Court of Zug issued a judgment in favor of the plaintiffs. The plaintiffs say the ruling supports their position that Lubin breached his duties. Consensys was founded in October 2014, about 9 months before the Ethereum blockchain launched in mid-2015. The firm develops and hosts infrastructure projects that underpin much of the Ethereum network. The plaintiffs are seeking damages across 6 separate causes of action in an amount to be determined at trial. So this concludes our top headlines. If you haven't already done so, don't forget to click on the like and subscribe buttons, as well as the notification bell. Also, leave your thoughts in the comments and share this video with your friends and family. Thank you all for watching Crypto Top Headlines, bringing crypto's news to you.